55 points. We're at about 8,205 at this point in time. Okay, let's focus on the FMCG segment, staples essentially. Marico remains optimistic on the situation improving in the January to March quarter. That is the first quarter of calendar 2017. Speaking exclusively to CNBC TV18's Priya Sheth, the managing director and CEO, Saugata Gupta, says the company will push the target of 10,000 crore revenue by a year or two.
I think there is a short-term pain, but it's a long-term, it's good for the country. Yes, there has been some execution glitches, but I think, as I said, that we believe that the situation will take still more time. I think sometime in the Jan-March quarter where things will perhaps ease out much more.
You know, is it the 30 to 35% kind of impact that we can run with as far as sales are concerned at this point in time? And when can we expect, this to bounce back? Because as you mentioned, the Jan to March quarter, there have been some concerns as far as, the timing of when the recovery will really happen.
So as I said, I think it varies from categories to categories. It will vary from also how much is the company's dependence on wholesale. As I said, there are regional differences. So if you look at some of the data that has come out in terms of off-take and other things, I think the range is pretty big. In certain categories, single-digit decline. Certain categories, it can.
In terms of margins, I wanted to quickly ask you, what's the kind of comfort range that you are running with? Is it the 16 to 17% range, or are you aiming for a higher figure?
So I think we have already talked about this, that we are okay with the overall blended margin of 17 to 18 for the whole company. Obviously, India business is more at a 19 to 20, while the international business at 17. Having said that, I think in some of our international markets, there is opportunities in terms of fixed cost leverage with scale, because the fixed costs, overheads of the international business are slightly higher than the India business in certain markets. While we have set up capability ahead of growth, I think there is enough opportunity to drive scale advantages.
You mentioned earlier that, the 10,000 crore figure in terms of revenues, that's what you're expecting by about 2019, 2020. Is that a number that you still run by, considering there's so many different kind of domestic factors that are really, coming into play this time around?
So I think the number is an outcome. I think the first thing which we are chasing is, we've identified 5 areas of transformation, and we needed to be, top quartile in all these 5 areas. And we firmly believe that if you do the right things, results automatically happen. Yes, you are right that because of the deflation, I think that number may have got pushed by a year or so. Having said that, I think the way to look at it is that if you look at historically, the inflation has been 6% for us in the last 5 years. You can take away a point or two because of the fact that we are entering a year of deflation. So as soon as you get a volume growth of around 10, if you have to get it, and to add to that, you add a 4% deflation, I think 4% inflation. I think that gives us closer towards the 14%, 15% revenue growth over a 4-5 year period. For that, I think we have to accelerate our new product performance. And while everything is organic, there within a 3-4 year period, there could be inorganic opportunities. So it's still a number we should be gunning for. I think the question is whether, even if you are close to it, we'll be very happy about it.
Okay, let's get